Hello, good afternoon, folks. Welcome back to the Realist Realtor Podcast. This is where we show up each and every Wednesday at 3 p.m., where we connect real people with real facts about how you can gain financial freedom through real estate. I am so excited to be here this week. Thank you guys for last week. I did my confessions of a realtor last week, and thank you for giving me that week to do spiritual restoration, because we get tired out here in these real estate streets. So I definitely needed that time to rejuvenate myself. So thank you guys so much for that. I'm excited about our special guest this week. I promised you guys after the podcast episode that we premiered on July the 8th, where we were talking about how white people own 98% of the rural land in America, and the fact that so much of that land was lost from Black families and how that occurred. And if you didn't listen to that podcast, please make sure you go back and listen to that episode 32, which was July the 8th. And I promised you guys that I would come back with an expert and talk about different types of products, one of which was the USDA loan, the Rural Development Loan. And there are actually two types even under that loan. So today we are privileged to have a friend of the podcast, Mr. Kevin Newton. He is with Success Mortgage Partners and is definitely a leader in his field, and someone who is very dear and sincere to this podcast, because he is someone who is factual, he makes information attainable, and he is very giving of information and of his time. So he is definitely a lender that you need to connect with and that you would want to know, whether it's for a new loan product or even for refinancing. So we're going to make sure that everybody knows how to connect with Kevin Newton after this podcast. How are you, Kevin?
I'm doing well, Carmelita. Thank you for having me on.
Thank you for being here, brother. You are always a pleasure, and you always teach me something new. So I'm going to thank you in advance for providing that for us today. So we're going to launch right in, Kevin, and talk about the USDA loan, the Rural Development Loan. And basically what we have, or I have several questions that many people ask about this particular loan product, which really, Kevin, could be a good option for folks, especially when we know that it can help people get a product with 0% down, and it can help folks who may not be in some of those higher brackets of income. Can you give the listeners just a brief overview of what the USDA loan is?
So basically, USDA loan is backed by the federal government, USDA, United States Department of Agriculture, and it's a product that's that serves the rural community, and maybe like a rural community, no more than maybe 10 or 15,000 population, and it's 100% financing program. So no money down, very little mortgage insurance that is involved with that program, and has income restrictions. You can't make over $101,000 a year, which in our area is still possible.
Yes. I love that you said that. Still possible. That's what we like to give people, hope. Because if they don't know about products like this, they don't realize there's hope. There's a way to make things happen. My movement is own your own. I want everybody owning dirt. So, and I want to hop into one of the first questions though, Kevin, because when people hear rural, right, they think, well, I don't want to live way out in the country, or, and I'm a country girl, so I don't mind the country at all.
Yeah, me too.
But I think, one of the things that I learned when I first came into real estate 10 years ago about this particular product is that people might be surprised what some of those areas are, because like you said, one of the things is that whatever the location is, it has to have, less than like 35,000 people or whatever. And there are many areas, right, on the fringes, like the suburbs of Fairfax. So not Fairfax City, but Fairfax County, right?
Right.
Not Alexandria City, but Alexandria, like they literally touch. And so I think people might be surprised, and that's just in our area. Of course, this program is nationwide, but
Right.
they may be surprised about those areas. What where do people learn about where those areas are?
That's a great question. USDA has a link, like a search link. You can type in
Okay.
the address. So if you see a property, let's say that's in Fairfax County, and you put in that address on the USDA website, so your viewers can just go to USDA property search, and it will come up, and then just type in that address, and then it will come up to say if it's eligible or not eligible. If
Yeah.
you get a green, then it's good. If you get a red, that's not good.
And I'm going to include that link in the description of this video as well as in the description of the podcast, because
Okay.
what Kevin is saying is pivotal. You type in that address because you may be very surprised. Properties that you're considering may very well qualify for this product. So that is important to remember. And like I said, I'll drop the link here. Kevin, can you talk to us a little bit about the difference between the direct and the guaranteed program, because they're really kind of pros and cons to both. You know what I'm going to say, but can you tell
Right.
me the difference between the two?
Right. For my dealings with my dealings with it, with USDA, there's certain amount of acreage of land that you can have. I think it's about like 2 acres of land that you can have on the property. And then it's also based on, where the map. So when you put in that address of the property, it has to come up within that, and then it will tell you as well too. And they have USDA offices, and up in Marlboro, and I think they have one in Virginia as well too. It all depends on, what area that you're purchasing in. And when
Mhm.
you do these loans, it has to be sent to the USDA so they can sign off on it, and then your lender, whoever you're working with, will sign off on it as well too, and then they'll approve your loan. Um, yeah,
And
pretty
I
much it.
think that's so important too, about because when it's really not as well, in my opinion, I don't think it's as laborious as some loans can be, but I do
Right,
feel like it's best, even though you can go directly through USDA, you got to remember that's just a government person, right? And we
right,
know as realtors, if I'm out with you on a Saturday looking at a property and we need to adjust your pre-approval letter, and if you don't remember what a pre-approval letter
right,
is, you better connect with Kevin Newton so that he can educate you about that as well. I can't submit that offer without that letter. I can call Kevin and get Kevin immediately and get that letter so that we can, make that offer.
right.
And that's important as far as working with that lender. That's why I always, that's one of the first things I continually say to people: before you start doing anything with me, you need to talk to that lender first so that we know the strength of what it is that we're doing. So I'm glad that you mentioned that. And we talked about, you mentioned briefly about the income limitations. Would you say this is designed to kind of help people really realize the dream of home ownership that may not, be making, larger six-figure salaries every year?
Yeah, sure. I feel that the program is for maybe low to moderate income buyers, and also buyers that don't have a lot of money to put down. So, like I said, it's 100% financing. This could, get a person into, maybe their first starter home, and work their way up to their next home
That's
once
right.
they sell that home. So it's a good opportunity to build your financial wealth through real estate and getting your footprint in with that particular program.
And the other thing with the income limitations, are there other limitations, credit limitations, anything of that nature?
So that's a great question. So for credit, um, with USDA, they want your credit score to be at least, I would say, between 640 to 660. It all depends on what the so USDA uses um, the underwriting system called, we call it GUS, but it's the government underwriting system. So it has
Okay.
to go through that system and get an approval. And the higher your credit score, the better. It all depends. If you have a lower credit score, then your debt to income ratio needs to be fairly low as well too, to see if you can get approval that way. But if your credit score is higher, then the least like bumps in the road that you're gonna face. Just like when you
Yeah.
ride in an airplane, you're gonna hit some turbulent spots. When you have a lower credit score, the turbulence may be even more choppier on your flight compared to someone who has a higher credit score. Just a Yeah,
Yes, that's a very good description. That's why all the homeowners that take my class, 700 plus club,
right.
that's where we always want them to be, because it gives them a better positioning. And so, and that too is doable. So that's why
Yeah,
I
absolutely.
love, yeah, I love having these conversations with folks. Are people allowed to use USDA if they're thinking about an investment property?
No, no, it has to be their primary residence. Can't use that program for investment.
Got you. That's good to know, people,
That's a
because
great question.
yeah, because sometimes people, when they think about a program like this, they may think, well, hey, that might be an opportunity. Let me follow that up with this. What if the person is invested in a multifamily and they plan on living in one? Does that still not qualify, since the majority of those units would be to generate income?
Correct, correct. That's a great question. I have to do a follow up. I would say no, but I have to check that out. I've never done a multi-level, because you got to think about, it's a rural area. So
Right.
typically a multi-level being a rural area, it's a 50-50 chance.
Sure, sure.
Um, Typically, it's predominantly single family homes
Right,
in those areas. But
right.
that's a great question. I haven't ran across that one yet in the 15 years of the business.
Hey, well then let's make it the first. Let's they should connect with us. We might be there first. We're gonna be the trendsetters around here, Kevin. They're
Yeah,
gonna, yeah,
yeah,
people will imitate us.
yeah,
um that, yeah, so that's interesting to know. Yeah, I would definitely be interested in knowing that. And then also, you did mention about the single family homes. Again, the process is no different from buying a regular home. They would still, work with their realtor on getting inspections done and things of that nature. USDA doesn't, want a family to be in a home that's of ill repair. But to kind of follow up to that multi-unit question, what about new construction?
yeah. New construction, shouldn't be a problem. Multi level, that's one that I've never come across
Right.
yet.
I
Um,
didn't I didn't know new construction was allowed. So see, that's good to know.
yeah, yeah, yeah. So if you purchasing a new construction, like if you buy Brandywine, some parts of Upper Marlboro, if it falls within USDA, Calvert County,
Sure.
for new construction, yeah, it fits in there.
And those are not places in our area. For those of you listening, we're in the DMV area, so that's Washington D.C., Northern Virginia, and Maryland. When you speak of places like that, they are not far away. They're really
Right,
not. Yeah, I
right.
mean, in this area, everything is kind of relative, as it is in other areas as well. I don't care if you're talking, Georgia, or spots in New Jersey. Like, those things are very relative. You're talking a 10-20 minute drive. Now, we know in our area we have traffic, but but still in
Yeah.
proximity, that's not too bad at all.
Uh,
And then you mentioned the limited insurance, PMI. Like, do they have, is PMI a part
yeah,
of
it's private mortgage
USDA?
insurance.
That's
Yeah. It's
okay.
very little on the USDA program, but you do have some private mortgage insurance factored in there for that particular program.
Okay, okay. But it's nice it's not as much, probably because it is backed by the government. So they probably, and again, for that low to moderate group, So they're probably trying to make this product as helpful and attractive as possible. Because that's why I said I like people
Right.
to know about all of these products that are available to them. Because listen, Kevin and I are saying very clearly to you folks, there are no barriers to owning dirt. There are no barriers to owning real estate. None. We can help navigate any challenge that, trust me, we've seen them all. We've seen them all. Kevin's probably seen more than me. So we've seen them all. And if you align yourself, with a realtor, a good lender, we will show you clearly how to navigate. But there are no barriers if you are, number one, committed and willing to do the work. And sometimes, Kevin and I can both attest to this, it really may not be as much work as you think, but you'll never know until you talk to a lender. So
Right.
yeah,
Exactly. Exactly.
so don't ever
Yeah.
be afraid to talk to a lender.
Yeah. I was you was just saying something. I just lost my train of thought, but it'll come back to me. Um, yeah. Go ahead. I'm sorry.
No, that's okay. That is all right. I'm just grateful that you are sharing this knowledge with the viewers. And then let me just check for other questions that came up. We talked about the credit. Employment. Is there any length of employment that's required?
Typically, what every other loan, 2 years work history
Years.
that what
Okay.
we're looking for. Yeah, same standard for either FHA, BA, or conventional loan. Oh, this is what it was. The mortgage insurance. So
Yes.
the mortgage insurance is not as high as if you would see on a FHA loan. So you know, um, so it's very, but I mean very little is very inexpensive.
Got
And
you.
then, I mean, they have to put the mortgage insurance on there because you got to look at it that, you're getting 100% financing on a loan and you're still getting, a very, good rate. I mean, right now, I mean, rates, money is cheap right now. So, it won't be as high. Some 100% finance loans they give you high interest rates because of the risk, because the bank has to put that mortgage insurance on there to protect them from any default, possible foreclosure, short sale. So they're just factoring in a portion of that risk on the loan just to make sure that the lender is covered.
Sure. Okay.
But and you still get very competitive rates that's being offered in this market. So
I love
USDA, I mean,
that.
it's a great program.
That's good to hear. Okay, I'm going to close up these last three questions. Can USDA be used on modular homes? That was one of the questions that came through.
Yes, yes, it can.
It
Yep.
can. Oh, that's good to know. Let me tell you, Kevin. Here's my new thing: container houses. I need a container house, so I'm gonna
Yeah, I've
find me
been
some
hearing a
land.
lot about those. One of my clients brought that to my attention, and I researched it, and they are pretty nice. They range from many different prices.
They do.
So yeah, that's a good. That's
I
a good.
found my dream container home today. It's a 2-level, 3-bedroom, 2-bath, $87,000.
Yeah, yeah.
Yeah, I don't need much. And it's really large. So yeah, that's my new thing, container homes. Are you able to have two USDA loans at one time?
No, no,
Okay.
you can't. Because you would have to, you know, because if you have a USDA loan and you buy another house, then that's going to come up into, questioning doing underwriting. So, they're going to want to know what you're going to do with that current home. So just
Right.
like, with FHA, you can't have two FHA loans unless you're like 100 miles radius. But as far as I'm aware of, USDA doesn't have that type of guideline in place.
And it's probably because it's meant for a primary home anyway. Like you said, that first time
Right.
home
Meant for
buyer
a
or
primary home.
yeah. And this is important. You don't have to be a first time home buyer to use USDA. Yeah, we're not saying that
No,
at all.
no.
We're just saying it's a good product if you're looking for something that's 100% financing. And the last comment that I'm going to make, as I always make, and Kevin knows this as well, even though we're talking about a product that's 100% financing, you must make sure that you are still saving, that you are working with a budget and saving money, because we always tell people don't ever expect to come to the table with zero money. Is that accurate, Kevin?
Right, that's very accurate. I'm glad I'm glad you said that. We like to preach that you can't buy a house with no money. And I know people have gotten to houses with, little money, but that's still you have to still use some money to get into the house. So
That's right.
so yeah, that's a good point. Glad you
Yes.
pointed that out.
Yes. So that's why it's so important to talk with the lender, because the lender can give you a really good idea and say, well, if you would, qualify in this range, you might want to make sure that you're sitting on this much cash reserve. So that's why we always, people always think the process starts with us. The process starts with our lending partners. And so we always like to make sure that we are bringing valuable information, and they educate us as well. But I always like to
Right.
make sure that folks know it is a partnership, that, once the lender has, worked with you and gotten the numbers tight, that's when I'm activated. Wonder Twin Powers activate. So that's when,
Right.
we go into motion. Kevin, how can the folks connect with you? How can they find you? And don't worry, folks, I will also make sure that information is in the description.
You can email me at knewton@smprate.com, and my Instagram is mortgage underscore man underscore Kevin underscore Newton on Instagram, and on Twitter it's at Kev Newton, and of course my website is theperfecthomemortgage.com.
I love it. I love that. All right. So, folks, all of that will be in the description of this video and of the podcast. Kevin Newton, you are truly a scholar and a gentleman, and someone who is very serious about educating the consumer. And I thank you for that. Thank you so much for being with us on the Realist Realtor podcast. We greatly appreciate you, brother.
Absolutely. Thank you so much, Carmelita. It's always a pleasure to connect and spread knowledge to our community. I really appreciate you for doing what you do, and look forward to being on the next um, podcast with you
Yes.
soon.
Yes, yes, absolutely. Because there are many other products we need to discuss. Many, many, many. We might have to do something on refinancing too. People are out here doing that in huge
Wow.
numbers.
Yeah, yeah, yes, yeah. You said it right. Huge numbers. I mean,
Hmm.
it's incredible, unprecedented. You know, I can't believe it.
Yeah, well, that's okay, because you know what? If it's going to benefit them and bless their lives, we want that to happen. And you know what? I forgot to ask one last thing. With USDA,
Sure.
what are the loan terms? What are the loan terms they offer? 15 with 30? What are they?
So 30, and like the traditional ones, like
Okay.
30, 15,
Okay.
um, are the terms that are offered currently right
Okay.
now for USDA.
That's
You
good.
know?
That's
Yeah,
really good. 15 and 30, that's
yeah,
good. Yeah, I like that. I'm
yeah.
glad to know that. Good stuff, Kevin. Thank you for answering the viewer questions. We appreciate you, and we will be talking with you soon. Folks, thank you so much for tuning into the Realist Realtor podcast each and every Wednesday. We leave you in the same way in which we came, and that is in peace. Take care, folks.